Sure. Okay, you guys. Elia, Uboto. We are back. New week, new month. We're already in the third month of the year. So today's video is gonna focus on the budget of the Republic of Namibia, which was tabled by the Minister of Finance, Mr. Shimi Ipumbu, last week. And I'm just gonna go through some of like the major allocations to certain departments, and then also I'm gonna touch on the exercise duties, and then I'm gonna touch on the tax policies which were passed during this year. If there's time, I'll touch on some of the composition of the revenue of the Ministry of Finance, or what makes up like the revenue of the finance, the Ministry of Finance. Sorry. So just to start off, a budget a national budget is normally just a plan of like what the government is planning to spend and what it's planning to collect. So it's just a plan of their incomes and their expenses for the year. All right. So without wasting no time, let's get into this video. So this budget was tabled under the theme continuing the legacy of H.E. Dr. Hage G. Geingob by caring for a Namibian child. So that was the theme of this year's budget. And the budget itself, in total, I think it was about 96 billion compared to 83 or 86 billion of last year. So yes, without wasting time again, so let's get into the major transactions. So major allocations. So one of the major allocation was 25 billion was set aside for development of railway networks. And then there was a 970 million that was put aside for the Ministry of Education, Arts and Culture. And this is like basically for the construction and rehabilitation of school facilities. I saw the minister came through with some of the students from Augustinium High School and some schools as well, like in Havana, where there has been rehabilitation of infrastructure. Where he actually went to go and visit those schools, and I saw also some of the visuals of these rehabilitations. Quite impressive. And then the other major allocation was 700 million allocated to upgrade the informal settlement, like through land servicing and other program to give access to housing opportunities. Okay. And then the last one that I'm going to talk about is the old age grant and disability grant will be raised from 1.4 to 1.6 per month, effective on the 1st of April. Right. So going on to the exercise duties. So exercise duties is more like the sin tax that's paid sort of like on your alcohols, your tobacco products, right? So this is the increase that's gonna come in the 2024-2025 year. So number one, beer malts 5% alcohol is gonna increase by 14 cents per 340 milliliters, and then unfortified wine it's gonna increase by 28%. 28 cents. It's actually a percent. Yeah, 28 cents per 750 milliliter of bottle. And then fortified wine is gonna increase by 47 cents per 750 millimeter bottle. And then sparkling wine is gonna increase by 89 cents per 750 milliliter bottle. And then ciders and alcoholic fruit beverages, they're gonna increase by the first amount again by 14 cents per 340 milliliter can. And then spirits are going to increase by five Namibian dollars, $5.53 per 750 milliliter bottle. And then cigars are going to increase by 9 Namibian dollars, $9.51 per 23 gram. And then cigarettes are going to increase by 97 cents per packet of 20 cigarettes. And then nicotine and non-nicotine solutions, which is your electronic cigarettes and your vapings, those are going to increase by 0.4 per 1 milliliter. Okay, so moving on to the revenue composition, like what makes up the revenue of the Ministry of Finance, like per tax classes. The biggest contributor again this year is projected to be the SACCO receipts through the customs and exercise duties, which is going to contribute 34%. And then individual income tax and VAT both coming in at 24% each, and then corporate income tax coming in at 14%, and then other taxes coming in at 4%, and finally property taxes coming in at 0.4%. Okay, so just to sort of like go through some of the tax policies that were passed during this tabling. The first one being the corporate income tax, CIT, for non-mining entities is going to be reduced to 31% effective on the 1st of Jan of this year for the year ending 31 December 2024. Thereafter, with a further reduction to 30% taking effect on the 1st of January 2025. So the 2025 31 December 2025 period end, they are also going to have reduced tax, which is going to close off at 30%. Right. And then the threshold for income tax on individual will be increased from the current 50,000 to 100,000 per annum, effective the 1st of March 2024. So this one for me, this one's a big one for me because I think for the past 3 years, I actually been advocating for an increment in the individual tax brackets. Like, at least I was projecting at least 150,000. Start taxing somebody from 150,000, but 100,000 is also a good start. And it's good to see actually that when this came into talks, finally, there was a process and it eventually got implemented. So kudos to that. And we look forward to see more increment in this regard. So our citizens as well can have like affordability in terms of buying products and just surviving. All right. And then the other one is the corporate income tax rate for non-mining companies will further be reduced to 28% during the 2026-2027. Okay, that's a bit in front. And then there will also be the current exemption of non-resident shareholders tax for long and short-term insurance companies will be removed. And then the special economic zone CEZ bill will be tabled in the National Assembly during this year and before the expiry of the export processing zone, which is the EPZ regime, which is expiring during this financial period. So as just some of the incentives that are going to come with the replacement of the EPZ by the SEZ. So a corporate income tax for entities that are going to take part in this or investing in the CEZ, the special economic zone, you're going to get your income tax for your company is going to go to 20%. You're going to be charged 20%, so which is like fairly lower than other entities. And then your VAT will be 0 rated. Okay. And then introduction of a tax intensive program that will be incentivize employers to enroll interns by providing an additional corporate tax deduction as a result of this. Good initiative, but I feel like the internship program should also sort of like be they should be long. They should not be 3 months, 6 months. So like the students can actually like cultivate maximum knowledge and experience. 3 months is not enough even just for you to apply for a job, because most of the jobs they come 3 years experience and all that. So if we can push internship to at least be mandatory, to be a full year, just to start off at least a full year, then we can work around that going forward. Maybe we can make it a must for an internship to start as soon as a student enrolls at university. They should also like go for an internship at least every 6 months or whatever until they're done with their qualification. And the end of that, they'll probably be able to have like close to 2 years or 2.5 years of working experience, which will be easier for them to find jobs. Okay, good initiative by the way, but we just need to expand more on that, develop it, and just make it more favorable to the migrant child. Okay, and then the other tax policy is the threshold for mandatory VAT registration will be increased from 50,000 from 500,000 to 1 million. So currently, if your company makes 500,000 a year, you are mandatory required to register for VAT. But now this is going to be pushed to 1 million. So if your revenue is lower than 1 million, you are not required to register for VAT. Okay, and then the other one will be, so this is like on the properties now, property developers and new home buyers and all that. The following changes regarding transfer duties and stamp duties will be made to adjust for the effect of inflation, increasing the brackets for exempt levels from 600,000 to 1.1 million. And then the threshold to trigger thereafter duty rate of 8% will be increased to 3.15 million from the current level of 2 million effective in this financial year. And then there's going to be a super tax transfer duty and a stamp duty brackets of luxury residential properties, which will be introduced for properties that cost over and above 12 million. So the increase of the bracket from the 600 to 1.1 million for the exempt level is actually a good thing. So already now there's now a reduction in what in there's an increase in the threshold which you can pay tax, and then now we have property levies going up, being also increased from 600 to 1.5 to 1.1 million. So for instance, if you want to buy a house, right, on top of your cost, you got some initial costs like your levies and all those. So these are gonna be waived if you're buying a property that's less than, that costs less than 1.1 million. So this also is like a good thing, because now people will be able to afford properties. Not really afford, but it cuts off like that initial cost, because the transfer duties are normally expensive, especially if you're buying a property under 1 million. All right, so this is a good initiative. Just also to touch on the threshold again that was increased for the income, for the individual income tax. So the minister actually said that this is actually going to put back close to 660 million back in the citizens' pockets who are within that bracket between 0 and 100,000 earners. So these are good initiatives, as much as they're not 100%, but it's good initiatives, and like can always work around them as time goes by, and so we can ensure again that everybody in the country is able to afford a decent life, right? So that's the highlights that I wanted to talk about on the budget. If you found this video informative, do give it a thumbs up and go and download the budget speech and just also have a look for yourself. It's the right thing to do. So you guys must have a good week ahead. Elia Ubot. Cheers.